accordingly.
Okay. And I hope that you have the new groups, names and members and everything.
Yes, ma'am, we have it.
ठीक है. Okay, fine.
All right, welcome everyone. So let's start with the presentations with the group number 1, that is Mohit Goswami, Sachin Chaurasia, Pritesh and Ratnesh.
Ma'am, we are a group of 3, we will be presenting. I don't know, sir, about ma'am. We don't know about Pritesh. So Mohit will be sharing the slides.
Edited then. Fine. You can start.
Mohit, can you please share the slide?
Yeah, I've shared. Is it visible?
Yes, it is visible.
Okay.
So hi everyone. I am Ratnesh, and we are a group of 3, and we are going to present evaluation for Geo Auto. Geo Auto track, analyze, and improve your fleet operation. Geo Auto is a startup founded in 2019. So we will be presenting evaluation for Geo Auto. Next slide, please. So Geo Auto provides end-to-end fleet tracking solution with much more visibility on cash flows, ETA, driver behavior, patterns, and multiple other insights on fuel, engine, and AC. For trucks, buses, and ambulances, Geo Auto have integrated hundreds of vehicle healthcare parameters for quick check within the app. Dedicated products for sales management, lead tracking, and conversion is in pipeline. This is in development. Next slide, please. Okay, so Geo Auto is the fastest growing fleet management and tracking platform in India. In India's commercial vehicle owners, Geo Auto is available in Mumbai with 30K plus vehicle on board. Geo Auto have supported more than 2,000 fleet owners get visibility in their operation. So come on board and manage your fleets seamlessly. Okay, now from here, Mohit will be taking over.
Hello everyone. So our term paper was based on the valuation of Geo Auto. So valuation can be done by various methods like Burkus approach, cost to duplicate approach, future valuations, market multiple approach, risk factor, and discount cash flow approach. So in this term paper, we decided to present it and evaluate our term paper by discount cash flow approach. So our mission is to analyze and do valuation of a startup using discount cash flow method, also known as income method. In this, firstly, we have shown Geo Auto's profit and loss statement from the year 2015 to 2023, including all the 12 months. We have shown revenues, expenses before income tax, and also its margin. For this, we have some key assumptions like revenue growth and EBITDA margin. Then this is the balance sheet for our Geo Auto. From the year 2015 to 2023. Here are shown fixed assets, working cash balance, share capital, reserve and surplus, and the borrowings. Here also we add the data of the workers for all the years, and we assume the total number of working days and capex. So from here, Sachin will be presenting.
Hello ma'am, I am Sachin. Here I am presenting from the EBITDA of the company, and here are some various parameters which we have calculated to determine the valuation of the company. And first we calculated the EBITDA. This is the most reliable ratio wherein the earnings are considered before calculating interest, tax, or even loan amortization, and it does not get affected by the distortion in the capital. And EBITDA to the sale ratio will always be less than 1. Next slide, please. And here is the Geo Auto discount cash flow method for the valuation of the company, which we have chosen to show the valuation of our company. And we have calculated the total discount cash flow from 2018 to 2023, including all the 12 months. And first thing we have calculated is EBITDA, and from 2018 to 2023, and tax on it. And after that we have taken the income tax rate, terminal growth rate, and discount rate. And by using all these values, we have calculated the equity value of our company, which is 161.9. And next slide. Here is the Geo Auto discount cash flow. Here are some key sensitivities of our company, which will help us in the overall valuation of our company. First is the terminal growth rate and weighted average cost of capitals, which is given as following in the table. And a discounted cash flow implied multiple is also given. All the values are in millions, Indian rupees millions. And it here also given the capital to the EBITDA ratio, which is 6 and 4.9 in 2018 and 19 respectively. Next slide. One second. Here is the fourth slide, in which the overall discounted cash flow is given. Risk-free rate of return is 8%, and market return of our overall investment is 14%, and risk premium of our company is 6%, and beta decay, or we can say stock volatility of our company is 0.9, and company specific premium alpha, which is 2% of our company. And by these values, we can calculate the cost of our equity, which is 15.4%. And now we come to cost of debt, KD value. Pre-tax KD is 11%, and tax rate, as we have seen earlier slide, which is 25%. By this value, we can calculate the post-tax KD value. And now DE ratio, which is debt to equity ratio, or industrial mean median, which is 1:1, and by all these value we can calculate the WACC, which is weighted average cost of capitals, which is 11.8%. Next slide.
Only 1 minute left.
Okay, ma'am. And here is the references which we have used to calculate the valuation of our company, which is Geo Auto. Ma'am, in our view, valuation is not an art or a science, but more of an applied science. Thank you. That's all, ma'am, from three of us.
Okay, great. Okay, Harshita, before you start with the second group, I can see 39 people here, so let me make that announcement. Now, students, as all of you are aware, for all of you who have onboarded in the hostels, the exam will be held through physical invigilation. So all of you will have to be there in the room that has been allotted for those 3 hours. You will be doing the same online exam as your other batchmates, but you will bring your laptop and you will be physically proctored or invigilated over there. Okay. So I hope that some of you who have onboarded are here in class. Are you here?
Yes, ma'am.
Yes,
Ratnesh,
ma'am.
are you here in the hostel?
Yes, ma'am. Ma'am, I have just onboarded 3 to 4 days ago, so I am here, but I will be taking offline exam.
Yes. So do you know the room that has been allotted to you?
Ma'am, I have seen that in, but I don't remember what exactly is the LH hall number.
308.
308.
Okay,
Yes,
ma'am.
308.
Ma'am, we can check that. Ma'am, we can check that.
Harshita, just check that. Harshita, just check that. And also the exam is on 20th, but the timing is 9 to 12.
Yes, ma'am, that's the schedule that we received. It's LH
So
308.
I'm sorry, Harshita.
Ma'am, it's LH 308 only, and 9 to 12. The time is 9 to 12 on 20th.
Okay. So all of you who are here in the hostels, please ensure that you are in LH 308 at least 10 minutes before the exam time, that is 10 minutes to 9, with your laptops. Okay. And then exactly at 9 we will begin, and you will be physically invigilated over there. The time will be 3 hours for everyone. Is that clear?
Yes,
for all the
Okay,
people who have onboarded?
So, ma'am, we can see the slide, and it is not restricted to that. We cannot see the slide.
No,
So
you
can
can't
see
see the slides. It is not an open book exam.
Okay.
Okay, ma'am.
So, ma'am, then why we will bring our laptops?
Because that is what the instructions say. Haven't you read the email?
Oh, ma'am, I have
Do you
read the
want
email,
to give
but
a paper? Do you want to give a paper exam?
no, ma'am, I was just asking.
Okay. See, in the email that has come to you from Dean Academics, basically, you will also be giving the exam online only, but you will be physically sitting in that room so that you are physically invigilated.
Yes, ma'am. Yes, ma'am. That I understand. Like, but few of my other in other courses, professors have done that. Like, whoever is present in campus, for them it will be pen and paper based. So they will not get
So
any.
whatever you guys decide, I am okay with either. Whatever you guys decide, you tell me. I will conduct it for you the same way. Okay.
Ma'am, we
Also,
will bring our laptop.
okay, the other thing is that for students who had come here, but then they have left the campus, in case there are students like that, then they have to send us an email latest by today or tomorrow stating that they had onboarded, but now they are back in their homes. So they will be taking the exam from there only. If they don't give us this undertaking, and then on the date of the exam, if they are not there, then we will mark them absent and we'll give them a F grade. Is that clear? Because for people whose names are there in the list, we will not be sending the question paper to them via email.
Yes, ma'am. Ma'am, my name is not in the list, but I will be taking offline exam.
तो ये email एक भेज दो रत्नेश, ठीक है? Just mark a copy to me and to both the TAs.
Okay, ma'am.
So that we know that तुम physically exam दे रहे हो, ठीक है?
Yes, ma'am.
And for everyone else, I'm announcing this in the class. Samriddhi is going to send out an email also for everyone else who had onboarded, but then you have left the campus and you've gone back home. Please send an undertaking email today that ma'am, I had onboarded, but now I'm no longer in campus. So please send me the online exam. Yes, Marthan.
Ma'am, will there be different set of papers for online and offline?
No, there will not
Because
be
like
any different. No, there will not be any different set of papers because I want to maintain uniformity and fairness. And that is why if you are here on campus, you will just be sitting there in front of us and taking the exam. And naturally, for people who are at home, we cannot invigilate them personally. So they'll be taking the exam from there. Is that clear, Marcel?
yes, ma'am, that's clear.
Okay.
Ma'am,
Divya?
one more.
Yeah,
Ma'am,
sorry.
as you said that you want to maintain parity and fairness, but you cannot invigilate the people who are sitting in their homes whether they are accessing your notes or not. So you cannot check whether they are accessing notes, whether they have.
Now I agree with you, but this is mandatory now for people who are here on campus. They have to take the
No,
exam sitting in that hall.
no, actually, the Senate has only mandated exams that you have to take via the LHC. So that is to ensure that we as students will not collaborate with each other or have any contact with each other. But there are several courses, almost all of my other courses, people are giving open book exams so that the people who are at home or the people who are offline, there is no difference between them, because it's natural that for a 3-hour exam duration, nobody can check whether during those 3 hours those people are accessing notes or not, they're like looking at the examples or not.
So, matlab you need the permission to cheat as well, right, Divya? That's what you're saying.
Yeah.
Ma'am,
Yes, ma'am. We
a
should
point
not
I'd
be
like to
allowed
make here.
like that way.
Just a point I'd like to make here, because we have had this communication before as well. Ma'am, during the minor exams, almost everybody who is now like who was considered on board were in the hostel rooms. There at that point of time, the very people who are now saying that जो लोग घर पे बैठते हैं वो cheat करते हैं, they didn't say anything about the fact that a lot of students were found that they were sitting in one room together doing papers. So why has this concept of fairness and everything just come now? I mean, isn't this kind of an assumption कि जो घर पे बैठता है वो cheating करता है? मैम, ये क्या बात हुई मतलब?
हाँ नहीं, I agree, and दिव्या बेसिकली यही बोलना चाह रही है कि हम लोग को भी अलाउ करिएगा आप लेक्चर हॉल में कि हम लोग भी आपके नोट्स देखें. मतलब you basically are wanting that only, right, Divya? Divya?
Ma'am, I am
Ma'am, if
I'm
like
not insinuating first. Okay, sorry, I've that is not what I meant. Actually, this was something that some professors themselves had already clarified before the exams, because that they had already said that this will be kept open book, so that there's no difference.
No, I have
But
never kept. Now, Divya, I have never kept any of my exams as open book. Do you remember me saying this anytime?
no, ma'am, of course you've not.
Ma'am,
Yeah. So
that
that is
is
the
why I
same
asked the
policy.
question whether. Ma'am, can
Yes,
I
Martin.
speak? Yeah, yes, ma'am. Ma'am, that is why I asked whether there'll be a different set of question papers for
No,
both
no,
online.
there will
Like,
not
because like
be.
the conditions are entirely different, and like if like this like if equality is to be maintained between both the like sets of exam, then like it needs to be done right. The paper, either the paper should be different or it should be open book for everyone.
No,
I mean
it is
something
not
like
an
that.
open book exam. If you're sitting at home and cheating, then that is something unethical that you are doing, Martin. It is not an open book exam.
Yes, ma'am, that is unethical. But can something be done to prevent that? I'm just asking that.
How do we
And
do that? How do we do that?
that is why I suggested two different
Exactly.
things.
How
Yes,
do we
ma'am.
do
We
that?
should for online people we should live on their soul whether they want to cheat or not. But for offline, it must be completely monitored.
See, the
But
thing
ma'am,
is, ever since. Yes,
can
Divya?
we have a can we have a proctored exam for everyone, so everybody has to turn on their web camera and the TS can monitor the activity? At least that can be like, can we have a proctored exam for everyone?
You can open your camera anytime, but the thing is that most students say that हमारे यहाँ नेट का प्रॉब्लम है, हम ये नहीं कर पा रहे हैं, हम अपना वीडियो नहीं ऑन कर पा रहे हैं, या दे पुट अ वीडियो ऑन लूप. So they loop पे दिखता रहता है that the student is sitting, but actually the student is not there. So all these things also happen, Divya, and this is something that we've all tried and failed. And that is why this has been brought up by the Senate, that at least the students who are here on campus should take the physical exam.
Ma'am,
Yes, Harsh.
just a small thing. If
Ma'am,
Yeah,
I'm
who's
sorry. I'm
talking?
sorry if I'm
एक
cutting
तीन
some.
लोग संग में बोल रहे हैं, एक करके
Yeah,
बोल.
this is Harsh. I'm sorry if I'm cutting someone off, but I'd just like to paraphrase what Martin and I think Divya is also trying to convey. Ma'am, I came to the hostel because I believe that the evaluation should be fair, right? I think that I should study and basically I should get the marks that I deserve. But at the same time, there is no way of ensuring that the people at home will stand by the same. So if I'm coming to make sure that the evaluations is same and I'm coming to make sure that I am graded fairly, but I'm at a disadvantage. So if we are not saying that we should be given the right to cheat, but we're saying that if the exam happens to be open book, there'll be it will be more equal because the people who are at home will raise the average, and I came and I studied to get a, let's say, whatever grade I wanted, but the average is too high and I'll be rated below that.
So what Harsh you are saying is that people are cheating. That's what you are trying to say, right?
Ma'am,
Ma'am,
yes, I'm definitely trying to
but
say that.
everybody doesn't teach even in online mode. Each you can't say that each and every.
Ma'am, Akash here. Can I say something?
Yes, Akash.
Thank you, ma'am. So actually, these points that are actually being raised by Harsh, Divya, Martan, all of them I've heard before in every other course that we have, and mostly what we heard from the coordinators back was 2 points. Number one, if cheating is indeed happening at home, then, and specifically for this course, why didn't people get like 20 or 20 or 25 or 25 in the majors? I mean, in the minor, sorry. I mean, you can very clearly see that the marks weren't that high. I mean, the way I see this is that the paper was quite intellectual. Even if you have the notes by your side, you really won't be able to do anything by looking at them. I mean, if you don't know things, you aren't really going to be able to solve them. So number one. Number two, ma'am, when people are talking about that we came to the campus and we, somebody's muting me again and again.
Who's muting, Akash?
Yeah, can anybody please? So
Yes, ma'am.
so
Somebody was muting me also.
exactly, ma'am. So anybody who has come to the campus, it's not because they want to have fair evaluations or something like that. They came way before in the semester. And what we heard people sitting at home was that everybody used to gather in the hostel rooms and cheat with all kind of their friends. So where was this argument of fairness at that point of time, that let's have different papers for people who are sitting at home, don't have their 5 friends by their side? I mean, how does this hold? I mean, just because the situation has changed now, they believe that they should have this so-called fairness. I mean, I fail to understand this, especially in a course where like looking at notes and doing something is practically irrelevant. I mean, you can see that through the minor marks.
Sure, Akash, I agree with you. Let me listen to Divya, Martan, and Harsh again because they have raised their hands. Yes, Divya.
So, ma'am, I did not assert that I am holier than thou and that I am giving it. And like, I'm not saying that everybody who's sitting at home is a cheater. I think that some people are trying to defend themselves and clarify it. I'm not saying that. It's not my assertions completely. But here's the thing.
Divya, you are on mute.
I was muted by someone, sorry. So I'm saying that I think some people are trying to come and like try to defend. So I did not mean for this to turn into an argument. I'm not saying that people are cheating, like people are cheaters. So I am in this course with like 50 strangers. Everybody is in this course with almost 50 strangers. We are not like we have no way of knowing what other people are doing. Like maximum 2-3 people who we know. I don't personally, I have no friends on this course. So that's aside. So I just meant to say that whatever exam conditions we have, it should be same for everyone. That's it. That's all I wanted to say.
So Divya, the exam condition is the same for everyone. Everyone is sitting with their laptops. That is why I'm not suggesting a pen and paper exam for all of you, because pen and paper may you'll have more difficulty. But that is how I'm trying to maintain uniformity. By giving the same question paper, both exams will start at the same time. The only difference would be that other people are sitting in their homes, and because you guys are on campus, you'll be sitting in the exam hall. Yes, Marthan?
Ma'am, someone was saying that earlier that exams, when people were in hostel and giving exams together. I'm just saying that if like things were not fair at that point of time, it doesn't mean they don't have to be fair now. Second thing, ma'am, it's just what Harsh said that we all are fine giving exams here, and whatever the
Marthan,
conditions
your
are,
voice
we
is
are equal.
very low, very low. Can you speak up? I can barely hear you.
Is it audible now, ma'am?
Yes, yes.
Yes, ma'am. I'm just saying that if things were not fair like earlier when students were giving exams in their hostel room, it doesn't mean that things don't have to be fair now. And second thing, ma'am, I'm just saying that we all are fine with giving our exams in the examination hall and whatever conditions there are. I'm just saying that either this could be then that the students who are giving exams in their LHC like can be graded differently, as in like the grades which have been like which will be awarded to them can be given in a different manner than those at home. I'm just raising this point because like they have
Why?
like an
Why,
undue
Marthan?
advantage with them, and that
Why?
cannot be
What?
melted over.
I mean,
Ma'am,
what
earlier
I
when the
advantage
exam was
force them to
online
come
for
to campus,
everyone,
right? Okay,
earlier,
okay.
ma'am, when the
I'm just
exam,
going to listen to Harsh and then I'm going to give my final word because there'll be no end to this discussion. We also have to
I'm
have
just
our presentations. Yes, Harsh.
say 1 second.
Ma'am, finally, yeah, sorry, Divya.
So, ma'am, I'm just saying that you can check the averages. Like once we give the exams, you can check the averages for people who give offline, and you can check the average for people who give offline. If you notice that there is a very huge difference, if there's no difference, then there's no point. If there's huge difference in average for both people, because I'm not thinking ki all the brilliant people are at home and all the stupid people will, or like lower average, below average people are giving from LHC. If there is a huge difference in average of those two, then please try to grade separately, because that will be an indication that some people who have been giving exams in different condition have benefited. That's all. Thank you.
Okay, Harsh.
Ma'am, even in online
Finally,
examination, there was no.
Yes, Ratnesh. Ratnesh. रत्नेश डिस्कनेक्ट ही हो गया है हर्ष बोलो
yes, ma'am.
Divya,
Finally,
you
I
can
would
put
just
your hand
request
down if
whoever
you have
is,
spoken.
yeah. So
बोलो हर्ष
somebody is muting again and again, and for the sake of it, please don't mute. Just listen to it, and ma'am is taking the final
Ma'am,
verdict. So let's
somebody
see.
left
Yeah,
me
let me
from the
check.
meeting.
who's doing this Harshita can you make out who's doing this
Ma'am, I'll try to pinpoint, but I don't think it's possible.
it's not possible Can you remove the rights of people?
Yeah, ma'am,
You can make us attendees or something like that. It would restrict us.
Yeah, please restrict the rights because they have absolutely no values or sense of basic courtesy. Yes, Harsh.
Ma'am, finally, I was just saying that you are doing everything that you can to maintain the uniformity between people who are giving exams online and between the people who are giving exams offline. But that is from your perspective. Ma'am, you have to take in account that in a meeting where people are not letting us speak, they will definitely open your notes and they will definitely search the web. And they'll even ask their friends to for help. All I'm saying is if things are if people are giving exams in LHC and if people are giving exams from home, you can just take in account that they should be graded separately. I have no problem in the same paper, same time, everything. I can even give closed book exam, but you have to understand that the criteria is very different. You are relying on people's conscious while they are muting each other to just speak and not let others speak. I mean, if it makes any sense, in other courses of ours, what professors do is there are two professors taking the same course material but on a different day. This is lab, and I represent chemical engineering department. So both of those their professors rate it relatively because it is obviously bound to happen that one professor marks student the different way than other. One is more strict, one is not. So all I'm saying is the people who give offline exams should be just like Divya said that the average would be very different. And there was a point raised that the average was not that much, so people should not be allowed to take open book exam because it wouldn't matter. If it wouldn't matter, so it's fine. Huh? Let it keep open book exam because you are also looking at it. Let's be fair. That's all I wanted to say.
You
Thank you.
don't worry about the evaluation. You leave that to me. Okay.
Ma'am, can I speak?
Ma'am, just one simple point.
Also, ma'am, I am saying that why should be two different.
Yes, Ratnesh.
So, ma'am, I am saying that why there will be two different gradings. Like even in online modes, there was no way knowing who is cheating and who is not cheating. So it never happened that for cheaters there was another grading and not cheating people there was another grading, because there is no way you can know that people who is cheating, who is not cheating. So in that way never happened different grading. So then why come now it will be different grading for offline people and for online people?
Yes,
Ratnesh, I'm
don't
so
worry
sorry,
about that.
but I
There will
represent
not be
everyone.
any
We're
other
trying.
grading. As
Yes, ma'am. Grading should be exactly same for all of them.
I just sent a screenshot on the chat.
Akash, just a second. Let me respond to
Yes, ma'am.
Ratnesh,
Please.
then I'll come to
Please,
you.
please.
Even in the last exam, in spite of all of you sitting at home, no one did very well. Okay. So I will ensure that the question paper is such that even if you have your book, but you have not applied yourself, you would not be able to do well in that. Okay. So I understand what people do when they're sitting at home. And I also appreciate some people because I saw that in the exams, there were a lot of copies that were absolute Xerox copies of each other. And there were a lot of people who did actually attempt the paper. It was very evident that they had not seen anything at all. So I really appreciate that. And I agree that it is unfortunate that people are having a debate on this. And we are expecting that people who are sitting at home or sitting in hostels are cheating and all. I'm very sorry to be a part of such a conversation, and I can only imagine what this means for this generation and for the future of our society. But anyway, let me take the call on that. The main policy is that for students who are here on campus, they have to be present physically in the LHC during the time of the exam with their laptops and taking the same exam that everyone else is. Yes, Akash.
Yes, ma'am. Thank you very much, ma'am. Neither am I very grateful to be a part of this conversation. I mean, but just one thing that I'd like to point out in light of, like open book exam or something is entirely your call. That's nothing I'm going to comment about now. But about the different grading, because ma'am, the same point has been raised in one of our other courses as well. And this is what the professor showed us. I've sent this screenshot on the chat. It's the Senate's minutes of meeting of the 29th of September. They say that the major examinations are to be in classroom for onboarded students, and the mode and all other aspects of examination are to remain identical for all students of a course. Like in light of this very clear brief, how can different grading be even suggested? I mean,
Yeah. So
like-
Akash, that is what I've been saying, because I have also been a party to the Senate meeting and
Exactly, ma'am.
the resolution that has taken place, and that is why I'm doing exactly what is expected of us and as faculty members, that everything will be the same. It is just that for students who are onboarded, they would be required to be physically present in the LHC that has been allocated for this exam, and everything will be the same question paper, the same mode, that is online. So they'll be asked to get their laptops and sit there and do it. So that is what will happen. Okay. And this is what I wanted to announce in class also. And I also wanted to make it very clear for students who had onboarded, but on the date of the exam, they will not be on campus. Please write an email to us by the end of today or by the end of tomorrow latest, because we will not be sending out online question papers to you. You'll be supposed to come there and sit and physically take it. If we will not be allowing you to then say that I am at home. Okay, so please be very clear on this aspect. If you have gone home, please send out an email saying that, ma'am, I was in campus, but I'm not in campus for the date of the exam. So please treat me as an online student. Okay. So please be very clear. I want those emails. And Harshita, I believe Samriddhi is already sending out that email to everyone.
Yes, ma'am, she will.
Okay. 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 So thanks. I think now that is clear and we can move on with the second presentation. Yes, Samriddhi. Thanks, Akash.
Thank you, ma'am. Thank you so much.
All right. So group number 2, Abhinav, Ratul.
Ma'am, can group number 1 leave?
Why do you want to leave? Isn't this a normal class? Shouldn't you be listening to other people's presentations like they have been listening to you? Who asked this question? Akash, do you have something to ask? Acha, Akash ka haath niche. ठीक है, Harshita, carry on, please.
Okay, ma'am. So group number 2, Abhinav, Ratul. Okay, so first of all, I want to announce that the Google Sheet is still not edited. The group members that we took was from the last edit. So if there are still any changes in the group names, please do inform me when I call out the names. So group number 2, Abhinav, Ratul, Priyansh, Alia, Martand. Is group number
Yes,
2
ma'am,
present?
we are. Yes, ma'am.
Yes, ma'am, we are present.
All right. Please start your presentation.
Ratul, can you please share your screen?
Actually, my screen share option is not working. Can someone else do it?
We are the presentees actually.
Hold on, I'll make you guys presenters again. Wait. Who is the one who wants to share the screen?
Ratul.
Ratul. All right.
No, I'm saying that my screen share option is not working. Can someone else do it? Abhinav?
Marthan, can you?
I'll do it. Just give me 1 second.
Yeah, sure.
Is my screen visible to everyone?
Yes, it is.
So, good afternoon, everyone. This is Group 5, and we'll be presenting on financial bootstrapping.
Martin, just have you told Harshita about the final group members? Harshita,
Yes.
please take the final group members from everyone, okay? Because people are shifting groups and all, or leaving
Yes.
them. Yeah.
Actually, we floated a Google form.
Ours is the same. Like
Yours is the
Ours is
same?
the same
Okay.
as
Okay,
earlier.
yeah,
continue.
everyone
Okay,
is.
okay, fine.
So we'll be presenting on financial bootstrapping. So to start with, what is bootstrapping? So originally derived from like the word which literally means pulling oneself up by your bootstraps. So it is the process of starting and growing a business just using whatever existing resources you have. Can be personal funds, personal computing equipments, a space which you own, or any other like resource which you have. So bootstrapping basically serves as a replacement or supplement to the different capital raising activities which are required to maintain the business's varied day-to-day operations. So the amount of money that has to be borrowed is lowered and the interest payments are cut. In bootstrapping, generally the progress is faster as the company has a lower capital. So there is lesser time to get the business off the ground where, and then in the end, bootstrappers have a significant advantage since like they can operate in relative anonymity for a period of while funding their own operations. So yeah. So now talking about how do you bootstrap basically. So to begin with,
I'll
you
explain
have
from
to.
here, Matan.
Okay, yeah, sorry, Ratal will take over from here.
So, if I have to explain this, how do you bootstrap? Like, we can try to look for businesses that require less initial investment or an amount which can be collected through an existing source of income easily. Or we can also carry out businesses which produce fast cash, like businesses with a big net profit margin and hence greater net free cash flows. Also, we can barter and exchange services for services so as to reduce the cash burn and expenses. One should also try to reduce their expenses as much as possible while running a bootstrap business. Uh, and as miscellaneous expenses can always pull down the net profit margins even in case of higher revenues. Also, one can try to form alliances with other business founders, which can further help in getting contacts, also the marketing of the venture, and eventually in revenue generation. Instead of looking for places to rent, one can try to incorporate their business online instead of physical. What do you say? That physical appearance, as it is far more cheaper option and with also no bureaucracy involved, uh, just unlike in case of physical offices.
Ratal, can you
Also,
please present faster? We are
yeah,
shortened.
also one should carry out some detailed and thorough market research before carrying out any such businesses, as any whale in the market can easily bring down bootstrap businesses. Yeah.
Okay. So now covering the bootstrapping strategies and techniques. So it is often necessary for small businesses to get started, and it actually preserves the value and wealth of a business which you establish. So you can invest that wealth in enhancing your product's quality, and it's often difficult in raising. There is a difficulty in raising and using money for growth. So one can like might need which might lead to like credibility loss with the lenders if one is raising money from investors. So like
So yeah,
Also, one should focus on customer relationships and also on the cash flow and keep the staff focused on projects that produce income or expand market share, as raising money is not a substitute for making money. Next slide. The Some other techniques and strategies would be to leverage your assets and look for a way to grow cash with strategic alliances and exchange use of product for other services. Also, minimization of capital invested in stocks, such as offering discounts to customers, can also be done. And one can also use subsidy finances, such as government subsidies.
So talking about the need, why bootstrap. So I mean, to get a small firm started, I mean, this is like probably one of the best possible ways, and then it helps in maintaining the company's worth as it doesn't dilute the owner's equity. And then again, there's no obligation to pay dividends to shareholders, so that wealth might be utilized in improving, like in doing product research and improving the product's quality. And then finally, I mean, raising and utilizing money for expansion is tough, so obviously if you bootstrap, that obstacle is gone.
So, adding on to this, why one should bootstrap. So, as you get the ownership of your business as a sole proprietor, bootstrapping allows you to retain complete ownership of your company, then controlling over the direction of the project or your business. When you accept outside money, you accept outside pressure also. So, also keeping your business, if you intend to like retain this for a lifetime, for your lifetime, so you can like perhaps even an intergenerational enterprise, in bootstrapping is the way to go. So after that, it's
1 minute
a
left.
sense of accomplishment, and then you're being compelled to create a viable business model. So like that's a wonderful news.
Only
So
1
talking
minute left.
about yes, ma'am. So talking about why one should not bootstrap, uh, as it is very evident, there are very short survival chances. That there is a shortage of finances if like you are bootstrapping. Then talking about the development, you will be very limited in your exposure. If you're not getting funded, you won't be having the board members. There would be a problem. Uh, in that aspect. There won't be any expert assistance, and of course, things would get very strenuous. It would be very hard for you. You have to hustle a lot more, and of course, you would have to maintain great order. Next slide, please.
Time up.
Okay,
So we have. Can we discuss this small case study?
just 2 slides are left.
Okay,
So
make it under 1 minute, next 1 minute.
yeah,
30
sure, ma'am.
seconds.
So we have this case study of Zerodha, which is now a unicorn and is a completely bootstrapped firm. Uh, it grew with organically with zero marketing expense, and the initial investment, which was required by the founders, was collected over the years by via trading in the stock market. So the first 1,000 customers were acquired by Zerodha through a blog website, uh, and its USP was to offer a highly competitive prices per executed trade, which could be afforded by anyone, and hence it beat the market leader ICICI Securities and is now the number one. Further, its growth was pushed during the COVID-19 phase with the large spike in the volume of retail investors entering the stock market, and hence Zerodha got its huge net profits by playing on the volumes.
So, ma'am, the conclusion is guys, the conclusion is that you get operational very quickly, and you offer high value products or services that can sustain direct personal sellings. And so, yeah, if you want to go fast, bootstrapping is a way. Thank you so much. This is our group 2 signing off.
Oh, great. Group number 3, can you please stop sharing your screen? Group number 2.
Yes, ma'am.
Okay. Group
Hello.
number 3, Hitesh, Rupesh,
Yes.
Sonu, Puneet, and Monu Meena, right?
Yes, ma'am.
Okay, please start.
Am I audible, ma'am?
Yes, you are.
Will you please give me the presentation rights, ma'am?
Sure. Hitesh is presenting, right?
Yes, ma'am.
Just give me. See, can you present now?
No, ma'am. I was unable to present. Yes, ma'am. No.
Now it's fine. Okay.
Is it visible, ma'am, my screen?
Not yet to me. Yeah, now it's visible.
Okay. So good afternoon, all of you. Today we, the group 3, are going to present our term paper on our research on allocating startup equity and public investment. So we all know that if we have more than one co-founder in our startup, or we have more than like we have 3 to 4 co-founders, so there is always a chance for equity distribution among them. They have like they have problems in equity distribution, so we have done a research on it. So we the team so we are the team of 5 members. That I am Hitesh, my friend Puneet Verma, Rupesh Taneja, Monu Meena, Sonu Kumar are going to present this case study.
So hello everyone, am I audible?
Yes, you are.
Okay. So what is a company? A company is a legal identity formed by a group of individuals to engage in and operate business, that is commercial or industrial enterprise. So companies are of two types. First is private company and second is public company. So it is next. So what is a private company? Private company is a company where the control is controlled by a limited group of owner, and it does not sell its stock to the general public. So instead of selling to general public, they trade among each other. So here the private company is further classified into three parts: sole proprietorship, partnership, and corporation. So first is sole proprietorship. A sole proprietorship is a company in which one single person or one person manages everything, and all the responsibility of the company is like commitment, liability, assets are of that single person. So its advantage is it can be set easily or subjected to few government regulation, no farm tax, and its limited is the life of the company is limited to that of life of that owner. And other limitation is personal liability is unlimited, and the most and most limited limitation is the fund rise is limited. So the second type of private company is partnership. A partnership is similar to that of previous sole proprietorship, but here the number of people that own this company are more than two. So all the responsibility of this company are on their hand, and this and its advantage is also similar to that of, but it is relatively simple than simple to set up, and relatively unrestricted by the government rule or regulation, and can be benefit from business partner skills and experience. Its limitation is its life of the company is depend on the partner's life or their ability. There is a risk of personal disability between the partners, and the fundraising is also limited here. And the third type of private companies are corporation. A corporation society is one that has a goal, the advancement of its member economic interest in line with the cooperative principle. Its regulation are its requirements are there is no maximum number of members, but minimum 10 members are required, and uh, management decided by voting, and registered of these companies are cooperative society registered. So second type of companies are public company. Rupesh?
Am I audible?
Yes, you are audible.
When private company become a big company, then it will try to list them into the market and try to become a public company. Though every public company has its own advantage and disadvantage. Though it is able to get a huge funding from the public while listing in the public market, but there is many disadvantages of being a public company. The founder of the company lose the flexibility. Flexibility is usually an asset for a company, but there is no such benefit in the case of public corporation. Every public corporation is bound by the law and regulation, resulting in the lack of operational freedom. So there are many regulations due to which the operational freedom of founders and the company lost due to being publicized. Second is to retail shareholder trust. The corporation make full disclosure to the public, like they have to show the balance sheet and the every other financial aspect to the public. So now from here, Punit will start. Like, what is the equity?
Hello, good afternoon, ma'am. So, equity represents the value that would be returned to a company's shareholder if all of the assets were liquidated and all of company's debt were paid off. And basically, the book value of owner's equity is equivalent to the company's total assets minus total liabilities.
Only 1 minute is left.
If we refer to startup equity, there are two most common type of equities: common and preferred. And common stock is it is form of corporate equity ownership, and it gives voting rights to the organization. And preferred stock uh, grants some rights to its shareholders. And equity in startup. Please, Puneet, continue.
So now covering equity in startup. The main question that every co-founder thinks and is afraid of is equity. It is very necessary to take up, identify the team, go with them for a long run and share equity bravely among members. So now the question arises, how does equity work in a startup? So there are some of the fundamental steps, and these steps are: first, allocating equity, determining the size of option pool, deciding on vesting, authorizing shares, creating a cap table, and purchasing founder share. So while allocating startup equity, consider why you are allocating startup stock before you start allocating it. One of your startup most necessary asset is equity. Before offering.
Can we just have one more minute?
Okay,
just 1 minute more. So now I am handling the presentation to Rupesh to cover upcoming slides.
So here is the what factor we have to consider while dividing equity among co-founders. So first is the financial contribution. Some entrepreneur put their money while other put their sweat equity. So one have to decide from the factors that who is going to contribute the financial support to the startup and who is going to contribute the sweat equity. So here are the two factors. And third one is the experience level. Like many of the co-founder have different kind of experience level in the different domain. Like some of them having a good business knowledge and some
please don't elaborate. You've taken away all your time, so please give the points and wrap up now.
So here is the conclusion statement. Like while dividing the equity among the co-founder and the investor, one can consider the flowing factor, whether one have how much experience in idea, business plan, domain expertise, commitment, or risk and responsibility. Like who is going to do the full-time job and who is going to invest his part-time time in the startup. So one can divide the equity equally among the co-founder, or can use these factor for dividing the equity among the founders. So this is our concluding statement. Like while dividing the equity among co-founder, we have two ways. One can divide equally among the co-founder to maintain the enthusiasm and confidence among the co-founder. And second one is they can divide by this formula pi calculator.
Rupesh, time up. Okay.
Okay. Just ma'am, last slide, ma'am. Actually, it is about the initial public offering.
No, you should have timed yourself better. We have to be fair to the other groups as well. Next group, please.
All right.
Okay,
so group number 4.
Thank you, ma'am.
Group number 4, that is Kamya, Arka Mandal, Amber, and Vikas Mandal.
Yes, ma'am. I will be sharing the slides.
Can you please tell me who is that person?
Arka Mandal.
Arka, can you present now?
Yes, ma'am.
Right.
Is my screen visible?
Yes, it is.
Yes, Arka. Okay, so I'll start. Hello, everyone. We are Group 4 presenting a term paper. Our topic is NICA and BPC study case. BPC is the beauty and personal care. So, starting with the introduction, NICA was founded in 2012 and in 2021 it was filled for IPO and has already become quite successful. This makes its business model and financial quite interesting to study. Now, we'll start with what makes NICA unique and then followed by its finances. The uniqueness about Nika is it not a product but it's a service and business strategy. Firstly, its use is inventory model instead of marketplace like Amazon or DMart, etc., to build bulk goods from brand at cheap prices, thus offering cheaper rates to its customers. The other way is how it handles the advertisement. It has a YT channel with over 1 million subscribers. They have magazines and discussion forum to educate its customers about their product. This was absent in the Indian market. People often bought expensive products which harm their skins. This makes the people to never return to the brand again. Nika solved this problem by explaining its product to its customer. In tier 2 to tier 3 cities, there are no reputable stores offer they sell duplicate products harming the customers more. Nika also guaranteed there are no duplicate products, thus attracting more customers to them. Over to Arka.
Now I'll be talking about the initial years of Nika. So Nika in its initial days were quite well funded. Their first funding was of $3.4 million, which is close to 25 crore rupees. The problem was thus not in terms of money, but in terms of brand recognition. A number of successful companies nowadays run only due to brand recognition. Companies like Gucci, Rolex, etc. charge high prices and maintain profitability only due to their brand value. In the BB sector, a company cannot be successful if it can't build its own brand value. In initial days, branded companies refused to sell products to Nika as they thought their brand value would deteriorate. But with time, Nika earned the trust of its consumers and built its own brand value. And now it sells products from over 850 different brands. And these brands include not only the brands that Nika developed on its own, but also other companies. So now I'll be talking a bit about its growth. So Nika reached its break even in 2017, just 5 years after it was founded, and now it has over 76 stores in 40 different cities. The stores are modeled after Apple stores to generate a perception of a strong brand. Even popular influencers and actresses would invest and associate with Nika to further grow the brand value. Foreign investments also followed after that. With all the investment money and profits, Nika even acquired popular brand and assets as a secondary source of income. So several smaller brands like Pipe, Bella, and 20 Dresses are currently under Nika. Um, so in short, we can say that Nika has profitability, but that is not its most important, it is not its strongest point. The most important part of Nika is its brand value, which acts as an asset to the company. This cannot be estimated in cash terms, but can be measured in other parameters like customer retention, regular customers on its forums, social media presence, etc. All these are reflected in the income statement of the startup. So now the IPO section will be discussed by Ambal.
Hello, ma'am. Myself, Amber. So the initial public offering of Nika started on 28th October and ended on November 1. The issue will be available for purchase by November 11. So on the day of its IPO, it was oversubscribed 82 times and Nika worth $1.1 billion at the time of registration. Nika is anticipated to be valued at more than 7 billion after the IPO. So despite the COVID issue, the company generated a strong revenue compounded annual growth returns of 48.2% from year 2019 to 2021 and will break even more in 2021. While Nika's valuation may appear high on PE basis, the company is one of India's few profitable unicorns, and it is believed that it is well positioned to benefit from the online cosmetics and fashion retailing industries. So over to Vikas.
Hello, ma'am. I'm Vikas. I will be discussing current finance and future of Nykaa. So, Nykaa was worth $1.1 million just before its IPO on October 2021. The given chart in the right depicts the allocated shares before IPO. Nykaa at present has an annual revenue of approx $320 million and income of $8.1 million. The beauty and personal care sector is volatile in public demand, and changes in inventories and products are often required. So, data acquisition and changing with demand is the key to surviving in such a market. Nykaa has applied workforce and statistics and data analysis and achieved to change their inventories accordingly. Moreover, as only 8% of the BPC sector operates online, 92% still operates in offline stores. So now Nykaa still has good chances to grow. And assets, revenue, and profits after tax are given in the table below. And now I hand over to Arka.
So lastly, we'll talk about the competition to Nykaa. Some major competition to Nykaa are shown in the table here. Let's take two examples for now: Amazon and Purple. Amazon, Amazon is a multinational conglomerate. It, however, is not specifically made for BPC sector. It is very difficult for Amazon to educate its customer about its product, as Amazon sells a wide range of products. There are also no discussion forums, as it acts as a middleman in India, connecting buyers and sellers. It also cannot follow inventory model and sell products as a lowered cost, as the Indian government restricts foreign companies to follow inventory model in India. Secondly, for Purple, it is still a growing startup which has a long way to go before it reaches profitability. However, Purple is getting popular fast and slowly building its brand value. As BPC sector is far from saturation, Purple may rise to be a significant player in the BPC game soon enough. Nykaa, however, has enough brand value that it is difficult to remove Nykaa from its position currently. Thus, it will remain a strong contender in the BPC sector for a long time. So we have also plotted a graph to see how much funding each of the startup gets and how much is its revenue. So thank you. That's all we had for our presentation.
All right, thank you. So group number 5, that's Hardik, Kamna, Maulik, Nikhil, and Ashok.
Yes, ma'am. I will be presenting. Kindly give me the rights to it.
That is Hardik, right?
Yeah, I guess I have it already.
You have it already. You can present.
So our presentation is about financial modeling for startups, and we are 5 of a team, and already we have talked to T about this. So starting about the content that we would be covering in this presentation would be like what is financial modeling and its two approaches and the assumptions that we use to in the financial modeling of a startup and the steps to create it, and followed by inputs and what are the outcomes we can expect from it, and the need to build a financial model of a startup. So starting from what is financial modeling for startups? So it is basically the process of projecting and forecasting future revenues, costs, staff, and other factors in order to determine the profitability and viability of a company. And given that the startup is still in its infancy, this modeling will aid in preparation of its budget and business strategies that are very well necessary for a business to thrive, and as well as its presentation to potential investors. So talking about the approaches of startup financial modeling, there are basically two approaches. So first is top-down approach, in that the entrepreneur use this approach in which he or she begins with macro factors and then moves on the micro factors. So he will start from the industry standards and then narrow it down to the targets that company can meet, and it at last the reality that uh, determining the forecast that actually the market share that actually the company can collect from the already presented market. So this approach is supported by total available market and the serviceable available market and serviceable obtainable market. Those are the three factors. So we start with the size of industry and work our way up to market share that we can grab. So TM is the first estimated in this model, and then followed by SAM and SOM. I would request Kamna to carry on from here.
So the main problem with top-down approach is that it can be too optimistic. So usually we take SOM as a percentage of the total market, which is very hard to achieve. So in this bottom-up approach, we take the tiny portion of the market for the sales and then assess the sales from the company's inside point of view to estimate the forecast and modeling procedures. Next slide. So these are the assumptions that we have made for the model. Assumptions can be anything that validate our numbers like market research, contract with suppliers, pricing validation, historic sales and bills of materials, etc. So first main assumption is base revenue and market share. We usually try to drive it through the industry standard and their positioning. Another main assumption which drives the whole financial model is growth rate, which while taking the growth rate of the revenue and cost, the entrepreneur needs to understand the macroeconomic factors also. And the next assumption while creating the financial model is future investment, because startups need continuous investment from the external sources for the growth. Next slide. Mohlik will proceed.
So now I'll be taking over. So now we'll be looking at the steps for making a business model. The first step is the calculation of revenue, calculation and forecast of the revenue for the market that we are introducing. We'll look into the top-down model. And the second thing we'll have to calculate is the cost, the overhead, and the direct costs that the company gets. The third thing is we calculate the income by subtracting the revenue uh, minus the cost. The fourth thing that for all these parameters we estimate a growth rate for a future growth. So can you change the slide, please? So this is an example that we have shown in the total. The first is the SAM and SOM model, and it is further elaborated in the next example. So I'll be requesting Molly for taking over from here.
Right. Can you change the slide? Yeah, now we will look into inputs to startups financial model. And there are basically these inputs which we can elaborate later. So next, please. Yeah, so these inputs define the setup of the complete model and include things such as forecasting period. In general, it is taken typically to be 3 to 5 years. And we use many things such as currency use, taxes, and we have already discussed in the assumptions that we have made. A financial model is a quantification of your overall business and should therefore be a reflection for our strategy. So first of all, we will discuss revenue. Now we have already discussed the two combinations or two approaches. One is the top-down approach and one is the bottom-up approach. We generally use bottom-up approach for shorter term sales forecast, which is 1 to 2 years, and longer term forecast for more time, like 3 to 5 years. This makes you to be able to substantiate your short-term targets on a detailed level. Second important thing is cost of goods sold. So one way of calculating this is by looking at the sales target defined in your revenue forecast. So in revenue forecast, we assume or we have already assumed the how many units of sales we aim to have. You then add per unit sales, the cost of raw material and labor costs involved in producing those goods. Next, please. The third are the OPEX or operating expenses. Typically, operating expenses for startups include events, traveling, legal costs, online marketing, payroll costs, accounting, rent. Right. Then fourth one is personal bracket, and it is relatively easy to make personal forecasting more simple. You can just split it into different categories. But with your personal forecast, you project the number of employees hired, including their respective salaries. Fifth is investments in assets. This type of expense is made by companies to maintain or increase the scope of their operations. And sixth is financing, which details about what financing is needed depending upon the stage of the startup. Next, please. Right.
So a good financial model usually contains at least three outputs, that is financial statements, operational cash flow forecast, and KPI overview. And financial statements are generally accepted way of communicating financial information across companies, banks, investors, and government. So it includes forecast of P&L statement, balance sheet, and cash flow
Time up.
statement.
Please wrap up quickly.
Yeah.
Right. Next, please. Right. So other supporting elements for that financial model, which we can calculate and are good, are working capital, depreciation, taxes, and valuation. Last slide, please. So we have not talked about why is it important to build financial model, but majorly there are two factors. One, it is good for in purpose of for the investments or the financial help that it might bring in, and the second is the entrepreneur can determine which features of the firm are missing as well as which aspects are unnecessary and remove them from the financial model. Thanks a lot.
Great. Fine. So group number 6, Akash Garg and Shaurya Srivastava.
Good evening, ma'am. This is Shaurya. Am I audible?
Yes, you're audible. Are you the one who will be presenting?
No, ma'am. Akash will be the one who's presenting. Akash, are you there?
Okay, I've made Akash presenter. Where is he?
Sure, ma'am. I'm just giving him a call. He's saying he's coming in 1 minute.
All right.
Hello. Hello.
Yes, Akash, you've been given the screen, right? Can you share your screen, please?
Yes. Actually, I couldn't unmute. Sorry. Yes, I'm just sharing, and then we'll start. Please give me a minute. Yes. Is my screen visible to everybody?
Yes, it is.
Yes, it is.
Perfect. So I'll start. A very good evening, everybody. Along with Shaurya, I am going to tell you a little bit about the outlook of entrepreneurial finance in India. Well, startups are based on revolutionary ideas and they have the potential to transform the world. Well, most entrepreneurs start their businesses with their own savings, which is called bootstrapping. However, to scale up their business, they often need external financing. That's the problem. Entrepreneurs that do not belong to a finance background often face difficulties in raising funds. Well, going from an idea to making it successful definitely requires money and guidance. So here's where investors come in. So what are the different sources of this guidance and this funding that entrepreneurs can gain? Angel investors, VCs, M&A transactions that exist for VCs, again through IPOs and crowdfunding. These are the 5 things that we are going to cover throughout our presentation. So angel investors, well, everybody knows what angel investors are. They are HNIs who often invest in startups and entrepreneurs for a share of the company. Well, these people may have some experience in the industry. And this term actually originated in Broadway, New York City, back in the 1900s, where wealthy people used to fund theater shows and they used to take returns once the shows became profitable. This is how the concept of angel investor came about. So what is their investment thesis? Of course, these are high risk investments. They mostly do not exceed more than 10% of an angel investor's portfolio. Some angel investors like to invest in specific sectors because they're simply associated with that. For example, fintech or edtech or B2C e-commerce marketplaces. So where does this capital come from? Well, mostly this capital is their own money. This is not a pooled fund where several limited partners pool in their investment and a general partner invests them. The person invests mostly his or her own money. And this is the definition of what an accredited investor means according to the US SEC. Well, what is an investment methodology? Well, there are 3 popular ways. The first is to have a direct equity share in the company. Second is to acquire convertible preferred stock options. And the third is to give a loan, which can also have voting rights. These are some notable angel investors in India and the Mumbai Angels Network, which is perhaps the biggest platform for angels to connect with investors. Well, venture capital. Venture capital is just a pooled set of money which comes from limited partners and general partners, people who are specialized investment managers. They invest these funds on behalf of those limited partners and take a commission on that. Well, the venture capital concept also started in the United States at the time of the Second World War. There are four main stages. The pre-seed stage, when the startup is just in the ideation form. The Series A, when the company is in its early stages, but it has definitely gained some traction in the market. Series B is always sought for expansion and scaling up of the business. New verticals are added. And in Series C, the company has proven a successful track record. Valuations can now be computed on a DCF basis because there is availability of recent historical data. Well, their funding methodology is often the same. However, it's kind of more complex. People prepare term sheets, which is an agreement between firms and investors, and the term sheets has a particular set of areas that are defined. For example, the dilution of stake, which I'm going to show you through an example. And there are some classes of shares. For example, Google classifies its stocks into Class A common stock and Class B common stock, where Class B common stock has very little voting power. So for example, if you look, there are three main investments into instruments used by VCs. So through an Excel sheet, I would like to show you what this means. So we have prepared this example of a CCPS, which is a compulsory convertible preferred share method, wherein you can see at the time of incorporation what shareholding they had at the seed round and then at a Series A round. And these are the investments that have been done by Fund A and C and Fund B and C here to calculate the pre-money and the post-money valuation. These are just these are some technicals of how CCPS and how valuations are computed for these startups, the pre-money valuations. And also CCDs, compulsorily convertible debentures, are now up and coming in the market. Well, global VC funds have a very good presence in India. Accel, Sequoia, Matrix, Y Combinator, all of these VC investors definitely have presence in India. Over to Shaurya to take you through how VC exits through M&A and IPOs.
Hi everyone. So talking about the VC industry in India, it's highly new concept that has just come into India, and therefore we don't exactly have much knowledge about it. So it's very important for us to go ahead and analyze the kind of exit options that these VCs have in India. So historically, most of these VCs, as you see in this graph, have been preferring the M&A route as opposed to the IPOs. So this is because of multiple reasons. The major reasons being the legal and the compliance issues that they often face with the stock markets and while registering the startup and accumulating the underwriters and so on and so forth. So that's why they have been preferring the M&A. So we have gathered certain insights that we'd like to talk to you about the startup and the VC industry in India. So first of all, talking about the funding stage, we analyzed that there are mostly the kind of VC funds that are successfully able to exit are the firms that exit at a later stage as opposed to the earlier stage. So this is an interesting analysis for the age. And talking about the ownership, most of the firms that successfully exit are indeed foreign in nature. That means there is some sort of an under appreciation of VC exits within the Indian firms. Next slide, please. Talking about the technology, we observe that the non-tech VC firms have chosen to prefer IPOs as opposed to the M&A route, whereas the high-tech firms have preferred the M&A. Probably this is because of the familiarity with the M&A system. And then IPOs and the age of the firm. So most of the firms have, as we talked about, the older firms tend to prefer the IPO route. Next, please. So physical location, most of the VC funds who exit are the ones who are located in a very strongly populated region full of networks and etc. And talking about syndication, which is a collection of VC funds coming together to sort of collaborate and join in their expertise, the firms having syndications are known to be better exits. Lastly, the non-socials have a higher successful rate as compared to the social sector ones. So lastly, we'd like to quickly wrap up with the crowdfunding, which and the regulations and the compliances that go ahead with the crowdfunding in India. So we'd like to focus our analysis onto the equity crowdfunding because this is the most applicable to the startup economy in India. So as we see in the slide, the companies can issue and ask for funds from the common public through the public issue. And we have actually outlined all the policies and compliance regulations in our document, as we'll share with you. And lastly, talking about the provisions regarding SME funding. So they can actually file documents regarding the SME funding, and then they can go ahead from there. Yes, so we'd like to close it up with the angel funds, and these funds essentially kind of differentiate themselves from the other funds in terms of the maximum amount of corpus that they can give them. So we have outlined all of the differential categories of these funds in our document, as you'll see later. So with that, we have come to the end of our presentation.
Well, in the end, we just like everybody to read through these 4 proposals that we have actually come up with based on our reading of a SABI document. So, of course, this is very technical, so I will not go into this in detail, but if anybody wants to definitely read them, maybe take them forward in the future, we would most appreciate it. Thank you very much.
Great. Group number 7, that's Ronit, Rishabh, and Ujjwal.
Hi, good evening, ma'am. I would like to present.
Okay, this is Ronit, right?
Yeah, yes.
Okay, Ronit, can you share now?
Yeah, ma'am. Just a second.
Great.
Is my screen visible?
Yes, it is.
So hi everyone, good evening. We are a group of 3, and today we would like to touch upon some financial aspects of a startup. So basically, this would include a process through which a startup goes in terms of finances, from bootstrapping to external funding, from managing finances to deciding equity distribution in the company. So these are some topics that we would like to talk about: bootstrapping, external funding, cash flow and cash management, equity and decision making, calculating the valuation of a company, and IPO. So what is bootstrapping? Basically, it's something that one needs some initial capital to start a venture from the scratch. Since the idea or the product is not market tested, people may find it hard to trust the company in the start and be skeptical about investing in it. Thus, the founder needs some capital to invest to give his or her company a head start. So this is commonly known as bootstrapping. It is basically a situation in which an entrepreneur starts a company with little capital, relying on money other than outside investments. This money is based only on their personal finances rather than seeking investors from outside investors or venture capitals or angel investors. Okay. So what is external funding? So external funding can be categorized into many parts. Why does a startup need an external funding? To raise capital for a lot of things, which we will discuss further. These are the types of funding that are provided by the investors in a company in exchange for equity or part ownership of that company. For example, it can be Series A funding, Series B funding, Series C funding, and this goes on. So as you can see in this image, that a startup can take financing from venture capital or an angel investor. So this is basically a Series A financing. So what is a Series A financing? It is the first step of the venture capital financing, or technically we can say is the second step of a startup financing after bootstrapping. Series B funding is mostly taking the businesses to the next level, past the development stage. Investors help startups in expanding their market reach, and this funding is used by the startups to grow to a larger level and help meet their demands. Series C funding is the fourth stage, or the final stage of the venture capital financing. And this is used for a company to scale up their operations and continuous growth. Lastly, mezzanine financing is a hybrid that sits between a debt and equity financing, which allows companies to achieve goals that require capital beyond what their lenders will extend. So from now on, Rishabh will take over the presentation.
So there's this term called convertible note, which is a short-term debt that converts into equity. So in terms of financing, what
basically it means is investors loan money to a startup as its first round of investing, and then they do not get their money back with interest. Rather than that, the investor receive share of the preferred stock as part of startup's initial preferred stock financing based on the terms of the note. Next. So I'll be talking about cash flow here. So the cash flow refers to the net amount of cash and cash equivalents being transferred in and out of the company. So the cash received represents the inflows, while the money spent represents the outflows. Positive cash flow shows that the company's liquid assets are increasing, enabling it to cover obligations and provide a and reinvest in its, which can be used to reinvest in its business, return money to the shareholders, or provide a buffer against future financial challenges. So cash flow can be determined by analyzing the company's cash flow statements and its balance sheet and records profit and loss accounts. So next. So cash management for startups means monitoring your cash level so that you can plan your growth. So we can use strategies like providing customer service, implementing payment policies from the beginning, developing automated payment solutions, which can play essential role in your cash flow management. So a major tool for cash flow management is analyzing the cash flow statement. So the cash flow statement includes cash received from accounts receivable, cash paid for accounts payable, cash paid for investing and for financing. Next. So yeah, I'll be talking about equity. So what equity means is that what shareholders equity means is that they are basically the assets. They are basically the amount of money that the shareholders will get paid if the company liquidates all its assets and pays all its debt in case of liquidation. So splitting the equity among the co-founders. Yeah, so splitting the equity among co-founders is one of the most important decision. Since each startup has different needs, many co-founders have different opinion on whether to split the equity equally or not. So one must remember that equity. One must remember that equity splits can have long-term impacts, and startup is about execution.
So next about calculating the valuation of a company. Business valuation can be explained as a process or the result of determining the value of a company. It is used to determine the fair value of the business for a variety of criteria like sales value, establishing partner ownership, cash flow, cash inflow, or taxations. The valuation of a company can be done in three ways, like asset-based or cost-based, market research, or income-based. So next slide. So why valuation matters? The answer.
Quickly.
Okay, so valuation is needed to resolve the legal issues, and if like a death of a co-partner, something will happen, so we can distribute the equity also based on this. Next slide. If a company needs to raise a significant fund, they can go public. The process of issuing shares of a private firm to the public in a look for stock assurance is known as initial public offering. When a corporate goes public, private share ownership changes to public ownership, and existing private shareholders' shares are valued at a public marketplace. Next slide. So these are the process of IPO in India. Like the first, investment banks are hired, which prepares the underwriting for the company. The sole purpose for such investment bank is to assist companies in raising maximum funds. Then filing application with SEBI. The investment banks hired by the company will prepare detailed applications with all the necessary documents, and this application will be submitted to SEBI.
Time up.
Okay, thank you so much.
Okay, Harshita. So I think for today the presentations are over. The rest will happen tomorrow.
Yes, ma'am. We'll start from group 8 tomorrow.
Okay, everyone knows that tomorrow is working as Friday, right?
Yes, we floated a mail actually.
Okay, fine. Okay. Then see you all with the rest of the presentations tomorrow. Okay. Thank you so much, Harshita. Thank you, everyone.
Thank you, ma'am. Good evening.
Thank you. Good evening.